stocks slip after a big drop in the dollar. Crude, metals and US bond yields as investors root for safety. Equities too slip but less sharply ahead of US inflation print later today.
Sales of big chunks of shares by Blackstone in Sona BLW and M&M in Mahindra CIE draw good responses from foreign and domestic institutional investors, signaling a healthy appetite.
Market masters strike a cautious note in their conversations with CNBC-TV18. Most advise caution given the current market conditions, but see investment opportunities emerging on a further decline.
US President Joe Biden promises all depositors in Silicon Valley Bank and Signature Bank access to their money. He assures taxpayers won't pay for the backstop and warns those responsible for the bank troubles with consequences.
Okay. Hello and welcome to Halftime Report. I'm Sonia Shenoy and with me is Ekta Batra. Well, things are not looking good for the market. Once again, the downtrend has resumed, and that's what we were indicating earlier in the day, that despite the US markets falling for 5 straight sessions, despite the Nifty being at a 5-month low, who is to say that there's no more, downside left? I mean, for now, the bulls are definitely on the back foot. The bears have tightened their grip on this market, and it's a 100-point slide that you're seeing. Not once in the day has there been any conclusive recovery in the market, and now the Nifty is almost threatening to break even that 17,000 mark. So not looking good at all. I think it's the bank Nifty, right? All of this talk about what happens next, about a recession. There's the Fed meeting. Of course, now I think consensus is that there won't be any rate hike, but nevertheless, there's definitely a lot of caution on board.
Hi, Sonia. Yes, absolutely. And we have the US CPI data this evening to reckon with in the US markets. And the expectation is that it'll probably come in at around 6% versus 6.4%, which it came in at in January. So there is some amount of softening which is expected in the CPI data. But do remember that a sub 6% figure will be taken with both hands. There were whispers of that. But let's see what eventually comes out in terms of the CPI data for the month of February in the US markets. In fact, we do have the WPI data for the month of Feb, which we are expecting for our markets anytime soon. So it is estimated to soften on a month-on-month basis. The poll that I had done has indicated that maybe the WPI data for the month of Feb would come in at around 3.9%. This compares to around 4.7% on a month-on-month basis, with core inflation probably softening all the way to levels of around 2.08% versus around 2.8% on the month-on-month basis. Remember that in the month of Jan already, WPI data had already hit a 24-month low. So maybe there is expectations of further softening. But that's not what the CPI data had indicated, which came out last evening. So let's see what that eventually throws up. We do have Lata with us. We'll get to her in just a bit once we do have the WPI data. So 3.85% versus our poll of 3.9%, better than our poll of 3.9%. Lata, what are your first thoughts? This compares to 4.7% month on month.
No, I mean, it's obviously on the face of it very good. We're just getting the initial numbers, and primary articles index has gone down, which means perhaps food at the wholesale level has come down. We have to really wait and see. The internal details aren't there. But this would mean that at some point in time, we are going to get the WPI fall in prices transmitted to CPI. Manufactured products inflation has fallen to 1.94%. Food inflation has fallen to 2.76 versus 2.95 in January. Sooner or later, these should come down. I'm waiting for the cereals number. That's the one, that cereals and milk. That's the one that caused all the consternation, if you remember, in the CPI numbers. We have to wait and see. Overall food inflation has definitely fallen on a month on. I mean, these are year-on-year comparisons, but from Jan to Feb, the YOY number is lower. All commodities index also down. The food index is up 0.1% on the month. So my sense is the culprit is going to be milk yet again, and maybe even cereals. That would be a bit of a disquiet, but on the whole, the headline looks good. We have to wait for more details. Let's go over to, okay, primary articles index is down 0.6% on the month, but the food index is up 0.1%. That is a bit of a bother, but let's wait and see. manufactured products index also up 0.2% on the month. So month on month, a bit of a worry that the fall has not continued. Let's invite the expert, Rupa Regi, the chief economist at L&T Financial Services, joins us. Rupa, the numbers coming in, wholesale price index at 3.85 compared to 4.73 in Jan. Good enough, you would think?
Yeah, this is exactly matching my projection. And
Okay.
but I am a bit confused because in yesterday's CPI print, you had mentioned in our discussions that fodder prices are rising. But actually here, if the non-food articles inflation has sequentially declined, because that primarily comprises of fodder prices. So
Okay.
I think we need to wait for more data points to make any firm statement about the trends.
Okay. No, this was something which was told to me by Ramesh Chand, the Niti Aayog agricultural
Yeah.
expert, and Ajay Veer Jakar. They're not obviously tracked on a day-on-day basis, but their fear was that milk products are likely to rise because of a fodder shortage on account of the heat wave. So probably they're also guessing that this might happen in the days to come. But do you see this trickling down? The wholesale primary articles index is fallen. Do you think, okay, cereals index is down 1% on the month. That's extremely positive. So do you think we can expect this impact on the CPI in March?
I think so, Lata. And from the first quarter also, the base effect will become very strong. So,
Okay.
and so far as the cereal prices are concerned, all these expectations that heat wave may lower the yield of wheat, etc., it is still not ascertained. But because as per the official reports, the temperatures have to stay very high on a sustainable basis for that to happen.
Okay. Okay.
And
Well,
luckily,
now, yeah.
in many states, especially the major wheat-growing states, they have taken, minor irrigation measures to control the damage. So on the whole, at this juncture, we cannot say conclusively about cereal prices also to increase disproportionately.
Oh, absolutely. Cereal prices, if anything, have come down at the wholesale level
Exactly.
month on
That's what
month.
we were expecting.
Down
Yeah.
by 0.95%. But milk is the one that's pulling it in the other direction. Milk prices
Yes.
up 1.5% month on month. That is February over January. And fruit prices are also higher. That's also contributing slightly, perhaps unexpected, because this is not a month where you see fruit prices rising, but this could also be a base effect. Rupa, in sum, what is the expected impact on CPI? You think that it goes fairly lower in March?
Certainly lower in March, but in the first quarter, noticeably lower because statistical base effect will also turn favorable.
Okay.
We may move from 6% handle to say 5.5%.
Okay. Okay, 5.5. So at least below the Reserve Bank's comfort
Yes.
zone of 4%, plus or minus 2. Okay, in manufactured products, I think the upward thrust is coming from fabricated metal products. That one is up 1% year on year. Month on month. Basic metals, which rose even in Jan, have risen further. It's a further 1.24% rise in basic metals. Cement is up 0.9%. Actually, manufactured products are somewhat more inflationary. I mean, there have been price increases in several of them. So month on month, manufactured products are up 0.2%. That is perhaps the core inflation worry, but core on the whole has gone down. You think that will impact the core inflation at the CPI front? Core has come at 2.4%. Compared to 2.8 in Jan, Rupa.
Actually, all the data points you read out just now, it is in conformity with what's happening on the ground because, see, globally also metal prices went up. So, that cost push effect is getting reflected in metal product prices. Then cement is going up, steel prices are going up because construction activity has picked up considerably in India. So that is all in line with expectations. But weakness of core, I think, is reflective of still not very strong private consumption demand. And we had seen that also in the third quarterly GDP statistics. If you look at constant prices, the private consumption spending, it is a tad higher than the pre-pandemic level. So,
Okay.
And that's why I feel that, only the cost push pressures are keeping manufactured prices high and not the demand pull pressures.
Okay. Well, a final question on core inflation itself. The Reserve Bank in its December policy clearly stated it wants to see the persistingly high core inflation to back off. Now, at the moment, you can see that in WPI, but yesterday in the core CPI number, it continued at 6.1. Are you seeing that come down anytime?
See, core CPI also is based on many administered price products, services, So it's not exact reflection of demand pull pressures. Okay. But yes, the way things are panning out, and as we discussed yesterday also, I feel that given the global headwinds and, these pressures of financial tightening, etc., our weaknesses in exports, etc., job situation, going forward, I feel growth is going to weaken and that itself will bring down the core inflation. But whether that will happen in March, I'm not so sure. But definitely in the first quarter of FY24, we may see that.
Okay, that will, of course, pull back the Reserve Bank's hand. That's what they want. Just finally, Rupa, yesterday you said that a 25 basis hike from the RBI in April is par for the cause. Now, the global tumble or risk off is just not going away. And when there is a risk off, obviously growth takes a beating. Do you think that the global slowdown may make the Reserve Bank pause in April?
Well, that is my expectation in the sense that is my wish. But, RBI will have to see, will like to control inflation sustainably below 6%. So if I go by these tendencies, I feel, and if I factor in their narrative, then I feel that they will raise it by 25 bips in April before taking a pause.
Fair enough. Thank you very much, Rupa, for joining us. Okay, so it's all cool on the WPI front, coming in at 3.85. The direction clearly is lower, and hopefully the lower prices will pass on to the CPI in the months to come. Nothing in this number to disturb the sentiment we got yesterday, which was that CPI is still adamant. So the Reserve Bank will be in a dilemma whether to hike because inflation is above the given mandate of the monetary policy agreement, or whether they should think global growth will do the work for them.
Absolutely.
It will keep growth weak, and that will pull down prices. Right. We have to really, I don't think anyone is the wiser. We will have to wait.
Okay, Lata, thanks a lot for that, for covering the WPI data. The market, by the way, is still under quite a bit of pressure. Today, once again, the Adani Group stocks are taking a big knock. So Adani Enterprises is now down 8%. And Adani Ports, the rest of the Adani Group stocks also under a lot of pressure at the low point of trade. So we'll try and focus on that on the other side of the break. Don't go anywhere. But before that, here's a quick programming reminder. Today, CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and ensure we take decisive steps to bridge gender inequality. The event starts at 4:30 p.m. and we'll bring you live coverage right here on CNBC-TV18.
Welcome back. Well, it's definitely turning out to be a down day for the markets. So the bank Nifty is underperforming, down around 0.8% at 39,234. A lot of stocks which are under pressure. We've been highlighting how a lot of these frontline stocks within the entire financial space are seeing profit booking, both from the PSU as well as the private finance space. For example, State Bank of India is down around 1.6%. Kotak Mahindra Bank has lost around 1.4%. Axis Bank has also lost around 1% So there are a couple of these counters which are managing to see some amount of losses in today's trade. Indices Bank, there was a lot of news flow with regards to that particular stock, which is corrected around 7% week to date. But now we're seeing some amount of buying coming in for Indices Bank at lower levels. So that stock is up around 0.3%. Just keep your eye out in terms of individual constituents on the Bank Nifty and how exactly those are trending as well in light of what is taking place globally. But let's talk about a particular company. Maharashtra Seamless is on our radar today. Interestingly, a note by HDFC Securities has said that a sharp correction in oil prices due to recessionary fears would affect capex, which in turn could affect future order flows to the seamless as well as the ERW pipe industry. Whether or not this is actually taking place, we have with us Saki Jindal, who's the MD of Maharashtra Seamless, joining in on the show to discuss this as well as the business. Hi, Mr. Jindal. Thank you very much for taking the time out.
Hello.
So the question is that we are probably, facing a bit of uncertain times when it comes to the global space. There are recessionary fears. Brent crude has corrected quite significantly as well, sub $80 or thereabout. Has that impacted your order inflow as of now, or is it even impacting inquiries?
No, I think the oil price correction is only a marginal correction. So our order booking is strong, and we are continuing to book more orders in the oil and gas sector. And this is not affecting us in the domestic market, but in exports there is slight difference. There is offtake is going to improve only in the next month or so, I think.
Okay. So can you tell us what is the way forward now in terms of your own growth? I think on your if you look at your order book as well, I think your consolidated order book stands at somewhere to the tune of little under 2,000 crores. It's gone up compared to what it was, I think earlier in the previous quarters, it was about 1,800 crores or so. What kind of execution timeline are you looking at on this 2,000 crore order book? And what is the order visibility like over the next 1 to 2 years?
Right. So usually we service the orders within 3 months, but there are certain orders which are long term for ONGC and all, which are going up to 6 months. So this is broadly the execution time.
So no, the reason I asked is because on your FY24 volume guidance, I think you've brought it down by 10 to 15,000 tons. That's at least what you mentioned in the conference call on the FY23 volume guidance. So can you tell us whether you would have to scale it down for FY24 as well? Are you seeing any kind of demand headwinds?
You're talking of the volume or the margins?
The volumes, the volume guidance that you had given out.
Volumes we will maintain. Like in the current financial year, we are going to be almost at par with last year. And in the next financial year, we will be increasing, expected 20 to 30% increase.
Okay. You all had maintained your margin guidance as well for the entire fiscal for FY23. Do you have any visibility in, one, are you on track to achieve that? And two, do you have any visibility on what FY24 might look like?
Right. So we have improved the margin significantly in the current result. And the EBITDA has gone up by 5% or so. So this is a good achievement, and we expect to maintain, provided the market dynamics are supportive, we will maintain this kind of margins.
Okay, so you expect to maintain this kind of margin guidance going into FY24 as well?
That's right.
Okay. You also had undertaken some amount of debt reduction in the quarter gone by in terms of your long-term debt. Can you tell us what your balance sheet position would be? What is the net cash on the company, or are you net debt? Do you have a net debt on the balance sheet?
No, currently we have a net cash around 470 crores. And it is currently invested in mutual funds and also certain intercorporate investments.
Earlier, you had said that there's very good order visibility coming in from Canada. What kind of traction do you see from there, and what kind of growth are you envisaging?
Canada is promising market, and as I just said, currently it's on the slower side, but next month it should pick up. And there's a very big potential in Canada, and the recent anti-dumping investigations, they were in our favor, and the normal values of low prices are in line with our export prices. So it is a market which is very promising, and we wish to increase the export there.
Okay. Just a quick question with regards to the net cash on books. Considering that you're net cash positive, how would you be possibly looking to utilize the cash?
Right. So we have certain expansion plans in our core business for upgradation of our technology and addition of a cold drawn unit, also a premium connection expansion, and certain drill pipe lines we're planning to add. So plus renewable energy expansion also. So these are the broadly areas, plus debottlenecking our finishing lines also.
All right, we'll leave it at that. Thanks a lot for joining in and speaking about the business. That's Maharashtra Seamless. But you know what, for the market, it's pulling back a little bit. So there is some damage control being done. The low of the day that we hit was around 17,038. And now we're back at 17,100. So a little bit of recovery is what we're seeing in the market. Nothing conclusive, really. When we come back from the break, Sachidanand Uttekar of Trade Bulls will be joining in. He'll tell us how to approach this volatile and weak market in just a bit. Stay tuned. Welcome back to Halftime Report on CNBC-TV18. As I was telling you before the break, the market is staging a recovery. We're actually in the green right now, and it's really very volatile. So you don't know which way it could go. But for now, there's been a recovery from the lows. Sachidanand Uttekar joins in to tell us how to approach the market. Sachidanand, things are changing on a dime. In fact, in the last 10-15 minutes itself, there's a recovery that's played out. But do you think that the sell-on rally is something that can continue? Because that's been the case over the last many months. And do you see much lower levels on the index in the near term?
Good afternoon, Sonia. I think the trend is clear enough. In fact, sell-on rise mode should continue. We have already seen this level of 17,000 defended in today's session. But if you look at the short-term averages, the prices are a bit away from the current setup. So probably the pullback that we are seeing will again be a good opportunity. We're expecting this particular pullback to extend somewhere close to around 17,200, 17,240, which will be an ideal level to deploy fresh shorts. If you look at the structure, Nifty is comfortably trending below its 5 and 20 exponential moving average. So unless we don't see a closing above the 5-day exponential moving average, the probability of a reversal remains bleak. If you look at the levels, 17,320 from here on becomes a stiff resistance. So the stop losses should be placed somewhere close to that on a closing basis. And the opportunity which we are seeing right now on a pullback basis should be utilized to create shorts. The immediate support which we are looking at is the September-October 2022 lows, which are placed somewhere close to 16,860, 16,770. I think this will be a very important zone to track when it comes to support. So we don't see any major support before that. So definitely this sell-on rise mode should continue at least for this particular series.
You expect sell-on rise to probably continue into the March series. But what about specific stocks? And, let's talk about stocks which have managed to be resilient amidst the volatility. For example, TechM is up 5% this week. It's declining today, but nonetheless, Sun Pharma is up around 0.7%. A couple of these steel stocks haven't done too badly on a week-to-date basis. Do you see strength in them technically at these levels?
Not much. In fact, the rotation has been really healthy. If you look at on a stock like Sun Pharma, this particular stock.
So I think there's some issue with that video. So we'll just get to that in a bit, Sachidanand. Sorry about that. For now, let's do one thing. Let's get you an update on which are the stocks which are recovering in trade. So there's suddenly a hue of green. And what's leading from the front is Indices Bank, L&T, Titan, Tata Steel. SBI Life, a couple of stocks that are batting for the bulls this afternoon. Let's slip into a short break. On the other side, we'll be joined by Raja Lahiri of Grant Thornton Bharat in our special segment, Deal Tracker. Stay tuned.
Welcome back. You've joined us on the Deal Tracker segment of the show, and we are joined by Raja Lahiri, who's a partner at Grant Thornton Bharat, joining us now. And we have access to the report which has been authored by the firm. So, Raja, substantial decline and a consistent one at that when it comes to the deal flow for the last few months and in terms of value as well as volume. What are the factors affecting it, and how much worse are you expecting it to go in the coming months?
Yeah, no, absolutely rightly spotted, Nisha. First of all, good afternoon to you. Well, if you look at the data, right, the data always gives you some sense. $1.75 billion of deals in the month of Feb 23, which is pretty much quite significantly down from prior years. If you look at the first 2 months of 23, $4.4 billion of deals, which is 50% plus down, again, compared to last year. So there's definitely a declining trend in deals that we are seeing. What are the 2 or 3 factors that are driving that? I think first is we've looked at the startup sector and the private equity sector, really kind of the deal volumes going down, and we've talked about the funding winters and all of that. So that is definitely playing a part. And the second is, if you look at the overall macro from a global perspective, there is definitely a dent in the sentiment in terms of deal making, the interest rates and all of those kind of things, impending recession coming. So that also plays a part in M&A and especially cross-border deal activity. So I think those 2 trends are playing out as we look at the numbers.
That's right. Macros are really defining the deal street and the deal flow as well. But the big accident that happened was the Silicon Valley Bank crisis. What is the impact on the ground on the deal street because of this, especially on the tech digital space?
Yeah, means candidly, if you look at that, it is definitely an accident. Silicon Valley Bank was predominantly a player in the tech segment, clearly had some role in the Indian tech sector as well. But if you look at from what has happened in the last couple of days with the kind of Fed coming in to bail out, I think that's a very good sign, number one. Second is...
But Raja, a lot of people want to understand, is it the Lehman movement for the startup industry? Is it going to have more contagion effect? And even if it's arrested, are more such accidents expected? What is the view coming out on the ground? And you're also in touch with many global investors. What is the sense?
Yeah, I think the sense one is getting is this definitely a sense of caution. I think this is definitely an accident where the market was not expecting. Now, having that has happened, I think what is the good silver lining is that there is a quick action that has been taken. So that is a positive sign, I see. The second is, if you look at from an Indian tech sector perspective, I think that it has a role in terms of the sentiment, right? In terms of concrete impact on the balance sheets of companies, I'm not kind of pessimistic on that. But definitely it will play a role in terms of sentiment. Third, if you look at it, we talked about the funding winter. So there was a kind of a wind of slowdown that was happening, right? But given all that, the only thing I would say is, which I always maintain, that quality companies with profitable business models will always win in these times as well, because there is a lot of
some of the sectors
waiting.
Also, Raja. So let me also point out that some of the sectors also remain slightly unfazed, even though the macros look uncertain going forward and the valuations have dipped and have been uncertain. And we had raised this, that hospitals are seeing a lot of traction. Which are the sectors at the moment still active and promoters ready to discuss the valuations which are more palatable to the investors?
No, absolutely. It's a great question. I think the sectors like healthcare, right? The entire healthcare segment we've seen from COVID, etc. I think is going to really play out. The hospitals, the medical devices, the healthcare tech, all that, the insurance tech, all of the allied sectors in healthcare will continue to play out. And we are seeing a fair amount of activity in that segment.
Right.
I think the second sector is really around e-commerce, right? The e-commerce players with profitable models, good market share, will continue to build scale, and they will need funds. So that activity is going to continue. Third, I would definitely say it's around clean tech, right? That's a big sector that's been a big sector of focus for the government. And we've already seen a lot of private equity strategics playing a role. And I think that will continue to drive deal activity. And finally,
so
I would say,
yes.
Yeah. Finally, I just want to conclude is that on tech, right?
Yes.
Within tech services and SaaS, I think these are two segments just watch out for in deal activity this year.
All right. So SaaS, tech services, clean tech, healthcare, as well as e-commerce. These are the sectors still seeing deal activity, but then there is nervousness on the street. Thank you so much, Raja Lahiri, for joining us. With that, we'll slip into a short breather on the show, but come back for more from the commodities segment. Manisha Gupta will be joining in.
Hello and welcome to the Halftime Report. Joining us on the show now is Rishi Nathani from MCX. Rishi, hi, good to have you. And what a day really, because MCX has hit an all-time high in sense of turnover across products. Much of the chunk, would you say, is coming in from bullion as we hit those numbers?
Yeah, thanks, Manisha. It's been a good day yesterday. We hit an all-time high on our overall turnover, which is 1.51 lakh crores single-sided, out of which options were 1,16,000 crores, and gold also was very high, around 8,000 crores plus. So overall, a very good day.
Clearly. And we wish you more of those, Rishi. But, you know, the positive cue from the market also comes in as there is more retail opening up in the MCX in sense of contracts. A lot of mini contracts have been launched, right from precious metals to energy. And, well, how have you seen participation come in from these?
Early days yet, but the signs are very encouraging. We are seeing a healthy OI build-up in all our mini contracts. Today, we've launched the natural gas mini contract, which is also seeing very good participation, and the other base metal mini contracts and the crude oil mini contract, all of them are seeing very good participation across the board.
This is a relaunch of contracts, clearly, Rishi, because it was in Jan 2020 when SEBI took them off. What would you say the exchange has worked upon on getting these back? Was there enough market feedback or participation waiting for this?
Yes, so apart from natural gas minis, which is new to the market, others are relaunches. And it was a need for the market, and there were a lot of people, especially MSMEs, etc., who wanted these smaller contracts. And the exchange also represented, and SEBI, in its wisdom, has allowed these contracts back. So we are very thankful for that.
Another thing that recently came in sense of notification from SEBI has been allowing of FPIs in commodity derivatives. I mean, this is a conversation that we've been seeing, hearing for last 6-8 months now. Now that is in, how much time would it take for markets to start making use of this? What kind of interest also are you seeing from FPIs?
So we are seeing very healthy interest, a lot of inquiries happening, and the exchange, after SEBI allowed them, the exchange has issued a circular on Friday last week allowing FPIs to be onboarded. Now it's up to the FPIs to come through their brokers and start trading on the exchange. There is nothing that stops them from starting trading.
We do understand that earlier it was about leveraging of foreign participants that was allowed. That didn't really take off. In its new avatar, how soon can we see the numbers climbing up?
So, well, it's all a function of how soon people get onboarded. So I would request all those who are interested to please come and start trading on the commodities markets, because we need to build liquidity, depth, and more participation in these markets.
Okay, that was a good pitch. Rishi, also, how are the numbers overall looking now? I mean, as we're looking, you know, for commodities, this seems to be a good time. We're looking at huge amount of volatility. Gold and silver in all various multi-contracts seem to be doing well. And the fact that perhaps essential commodities do not work in sense of trading in India. Are we looking at newer commodities, newer contracts coming in days to come?
Well, sure, we keep analyzing what commodities are good for the market, and as we get regulatory approvals, we'll definitely bring them. But having said that, see, geopolitics and the uncertainty that surrounds it, I think it's the new normal. So commodity markets are the place to come and hedge your risk. So that is why I think overall participation in these markets will keep going up.
Okay, all right. Well, MCX has hit an all-time high in terms of gold as well. So, a lot of interest in terms of commodity trading. Manisha, thanks very much for joining in, as well as Mr. Nathani, in terms of taking us through that conversation. We need to take a short break with the news that there has been a significant amount of recovery from the lows, but it's overall turning out to be a volatile trading session. However, the Bank Nifty has recovered significantly from the lows. 39,467 is currently where it's at. Need to take a short break. More on the markets once we're back. Stay tuned. Welcome back. Well, definitely a recovery for the Bank Nifty from the lows, so down around 0.3% currently for the Bank Nifty as compared to a cut of around close to 1% that it was showing earlier. Just want to point out that there are a couple of the IT stocks which are under pressure now, so watch out for that. Tech M, which saw a strong run yesterday, is now down around 2%. HCL Tech is down around 2%. Wipro too has lost some amount of ground. So there is some amount of profit booking which is coming into a couple of these IT stocks which have been fairly resilient on a year-to-date basis. Now, just watch out for a couple of the counters which are managing to gain. We haven't really spoken about them. Tata Steel, for example, is seeing buying at lower levels. That stock is up around 1%. We do have some amount of gains coming in from the likes of Larsen & Toubro as well as Titan. So just watch out for a couple of these gainers across sectors now. FMCG, metals as well as infrastructure, which is now seeing buying at lower levels. There's some news on Coal India. Just keep that in. The flashes are indicating some news with regards to that stock, and that stock should come up for you in terms of a reaction as well. That's all the time that we have on the show. Thanks very much for watching. This is Lunch. Up next.